Good morning, ladies and gentlemen. Welcome to today's webinar, Real-Time Daily Trading Ideas. Today's April the 9th, and just like every day of the week, I am speaking to you from our office in the heart of Berlin. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Paul's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and Forex offerings with spreads of just 0.8 pips. Just like every Tuesday of the week, Paul is going to be the speaker for today. I am passing over the screen to you right now, Paul. So, good morning, Paul.
Good morning, everybody. Here we are, Tuesday, the 9th of April, 2018. Thank you for the introduction. I hope you can all hear my voice. Hope you can all see my screens. So here we are in wherever you may well be in the world joining us. You're very welcome. And appreciate, and certainly in the UK and parts of Europe, we're into the sort of like the holiday season for Easter, and that is actually reflected in the markets itself, and we'll have a look at that in a moment. Today, we've not really got any kind of major formal economic data releases, not any really sort of big ones, other than Mexican CPI this afternoon if you trade the peso. Tomorrow we've got a couple of interesting pieces to just be aware of. Make sure it's in your diary. It's early doors, sort of 06:15. We've got Bank of Japan's Kuroda speaking at there I said early morning, so people will be interested to see what, if any, impact that has upon the Japanese yen. And we also have, well, interestingly, we also have the sort of ECB rate decision tomorrow at 11:45 rather than Thursday. We'll have US CPI, and then tomorrow at 6 we'll also have the meeting minutes from the previous FOMC meeting. Thursday we've got Chinese CPI, and then on Friday afternoon we've got for the US we've got University of Michigan sentiment. So a relatively light week in terms of major news. It's as I said, we're at this sort of time of the year is as people enter sort of the Easter holiday season, that invariably everything starts to go a little bit quiet for a couple of weeks, and as I said, the market reflects that. But as always, as seems to be the way over the last sort of a few weeks, it's another Tuesday, and we've got another Brexit vote here in the United Kingdom. So last night, once again, the government lost a vote by an amendment by that Cooper about making sure that we didn't crash out, and that invariably there was that the government would ask for at least an extension to June the 30th. This is all changing, hour by hour, day by day, as you're probably watching this. I've got a little bit of a slide here. Okay, there's been it's been quite a lot of shenanigans. A sort of a kind of a slide here. Hopefully, maybe you can see here. So here I am in the UK, and really even here in the UK, regardless of what side of the debate you're on, most of the people here are sort of seeing our politicians as a bit of a bunch of clowns, really, because they're just invariably making this thing, a lot more messy and drawn out than it actually needs to be. But what I have here is, and I have to say, courtesy of the BBC's graphics demonstrate it much clearer and faster than I could. But Mrs. May's plan, she's off to see Miss Merkel and also Monsieur Macron in Paris to have a talk about an extension before this sort of EU emergency meeting tomorrow. She is supposed to be requesting a further extension that will be as short as possible. The sort of the idea being that it's sort of the date being suggested this week is June the 30th. She's also later on engaging with talks with Jeremy Corbyn, the sort of head of the opposition, which is, you know, nothing's going to happen very fast there between those conversations. And furthermore, she's alienating her part of her own party even further. But out of that, out of those talks, you know, the question is, can they agree a compromise deal? Well, if there is a compromise deal, then the Prime Minister will take that new deal and request an extension to the EU leaders tomorrow. If there isn't, if they can't agree a compromise deal, well, then the MPs will have another vote on a range of options, another indicative votes, and then what will happen is the government will stand by if a deal is agreed by the MPs. And once again, she'll be, as I said, she'll be taking that to the EU summit tomorrow. So, of course, she goes to the EU summit tomorrow, and she'll be asking Mr. Claude Juncker and Mr. Tusk and the other 27 members for an extension. If the EU agrees, well, then the government will try to implement the new deal. But were the EU to refuse, which I think is unlikely, to be fair, well, then, you know, either we still have Brexit this Friday, 12th of April, or there will be moves to try and cancel Brexit, which is probably what most of the MPs would like. I think what will actually happen is that she will go and ask for an extension to the 30th of June, hoping that the EU sort of refuse a 30th of June extension and actually ask, you know, sort of imply that it needs to be a much longer extension, maybe 9 months up to 2 or 4 years, which would suit Mrs. May and her own particular plans, but will of course just add more confusion and more sort of fuel to the fire. So, you know, I apologize for all those people in Europe and all over the world. Our politicians are indeed acting like a bunch of clowns, and you know, hopefully we will have this resolved one way or another sooner rather than later, although I wouldn't bet my house on it. But of course, as traders, we're really just more interested in, you know, how does this actually, you know, play out with regards to the regards to markets, and that's what we're actually all interested in, isn't it? So it's a case of, let's have a look at, you know, what's been going on with sterling. Well, you know, sterling has been pretty much, as I've said for the last couple of weeks, it's in a little bit of a block. You know, we're actually, you know, one day it's flying high, the next day it's down on its luck. If I look at particularly in pound against dollar, that's what I'm kind of interested in here. This is the daily chart. Simple charts for those of you joining us for the first time. I've got you know, green and blue, green and red, bullish and bearish candles. I've got a blue 20 simple moving average, a red 50 simple moving average, and a green 200. And then I'm just drawing in significant levels of support and resistance and the particular patterns. All of that, if you wish to learn more about it, you can go to the archive section on the Admiral Markets YouTube channel or on the Admiral Markets Global Facebook page, and you'll be able to go back to look at some of the early sessions of the Mastering the 4 M's of Trading webinar, which I run every Monday afternoon at 4 o'clock London time, where we talk about how setting up our charts and how we do our analysis. But here, what I'm looking at here is pound against dollar, and what I've been kind of curious is that if I just maybe let's zoom in there a little bit, we can have a look at that. You know, I'm kind of curious to look at what is the market telling me. Okay, the market telling me at the moment this 130. Okay, big psychological round number there has been acting as support. You can see there has been acting as pretty significant support there. Okay, over the last couple of weeks and months. Okay, it's clearly been an interesting point. But what I've also pushed is, you know, even though we're pushed up to, you know, just around about 134, just underneath 134, what kind of interests me is that if we look here, okay, is that, you know, pretty much all of the sort of the moves from here, all the highs since then have all been lower highs, okay. Furthermore, I'm interested in, you know, what power the 20 period moving average has demonstrated on the daily chart. And we can see that, you know, it's really struggled to get above it, okay? Really struggled to get above it for the last few weeks. And in fact, every time it has just nudged its way up, it's basically been pushed down. So I look at that at the moment as, you know, we're getting squeezed from above, okay? And we're being held beneath at 130. And that's sort of just becoming into, you know, what sort of many traders would say as, you know, we're in a sort of a descending triangle, but in having been in an uptrend. So, you know, I think that this week we're going to get some kind of movement on that. We're either going to get, you know, the sort of, excuse me, we're either going to get an extension, which will be seen as positive for sterling, or there won't be an extension and there will be moves out, and then we'll actually see moves upon that. So I'm kind of watching that, okay, over the next couple of days. I think that could be quite a volatile move there, depending upon what we see tomorrow at the meeting, and out of that over the next sort of what we can say sort of the next sort of 72 hours. So that's just an indication if sterling is like that. If I look at quickly at the euro against the sterling, it's not really changed massively. Okay, we've had beneath here we had a big sort of bullish order block there, which has sort of pegged the supported euro sterling at around about 85, and then we've had sort of tops up around about 86.50 to 87 there. Okay, and at the moment that's where we're sat, just bouncing back and forth between 85 and 87. And once again, until we see some particular resolution over the next 72 hours, I don't anticipate that moving massively, especially, as I said, because we're waiting for some resolution and we're into that kind of Easter particular season. Kind of, what I'm curious about is, pound against Australian dollar. It's been showing pretty much the same interest or movement as many of the other sterling pairs, but a bit like that kind of bit like that pound against the US dollar, having reached a kind of a little bit of a high in mid-March. All of the highs since then, we've had lower highs, and once again that power of the 20-period moving average, once again, if you just look at how actually it's just acted as a little bit of a cap, a dynamic resistance. We also broke this rather long trend line here, the supporting trend line, and what we're seeing here is now we're down beneath the daily 50, and I'm going to be looking at that today, if to sort of be, we see a bit of Australian strength creeping in, having Australia struggled with a little bit of maybe sterling weakness. Well, then I'd be looking to see if we break that kind of recent low around about 82.75. I'll be looking for maybe to establish a short with a target down towards the daily 200 at around about 180.30. That's what I'll be looking at. So I'm going to be keeping an eye on that, keeping an eye on that today, just to see how that plays out, and whether that gives us just a very sort of short-term short play in possibilities there. So, as always, the FTSE, I talked about this a couple of weeks ago, how FTSE was in a nice uptrend, and that has just continued. If I look at the weekly chart, remember what I was saying that a week or two ago, that I needed to see it sort of get above and hold above that 50-period moving average on the weekly, which is what we've done. And now I'm actually just waiting to see that, will we get dragged north, by the US indices up towards around about that 7,500 area. That's what I'll be looking to see. Will we get dragged up towards that? Now, of course, those next few days will have an impact upon that. But certainly on the daily chart, I think we're being, a part of that is being dragged by the US indices, which we'll take a quick look at in the moment. But we talked about here, there were buying opportunities on the pullbacks, and that has continued to extend. And so we're just going to be looking at, see, will it get dragged north to around about that 7,500 area? That's for us to keep an eye on. So, that's a bit of as always, a little bit of a quick look at sterling and the FTSE, because, there's just so much going on. As always, they can be quite volatile, and, I expect some interesting moves on that over the next 72 hours or so. And as always, ensure that you have very good, very strict risk management principles in play. So if we have a look at some of the sort of the usual suspects, as always, dollar index, US dollar has been gaining strength. We talked about, effectively where we waited for a head and shoulders pat, but just look at that daily chart there, over the last couple of months. We can see that effectively it's been, just knocking about completely. And we said last week that the daily 200, had been acting as dynamic support. And we're really sort of, I see it's still, we're in a bit of a block there, between about 95 and 97.50. We're just within that block there, We're having a little bit of interesting around about 97 there at the moment, We're just maybe double topping it there. Some people might see that as a little bit of a head and shoulders pattern itself, a head and shoulders within a bigger one. But I think that personally we'll still sort of just sort of meander over here for about the next week or so. I don't expect any particular major moves to come out about that. I think what we'll find is we will just sort of drift down to around about that 96.20, with the kind of the daily 200 maybe acting as some dynamic support as it sort of nudges its way up to around about that 95.80 area. So there's nothing really leaping out on the chart at me there in terms of the dollar index. But of course, I want to take that forward into looking at how I look at the euro dollar. If I move across, here's the weekly chart. Let's zoom in a little bit. we broke that 113, and we've been hoovering down beneath it. Okay, not really made strong moves beneath it, but we're certainly holding beneath it. And it's actually when we look at the daily chart that I start to get interested. Daily chart, here we go. We sort of had that long descending triangle there. Okay, we broke through, and I was saying that we kind of almost like last week made a bit of almost like a double bottom there. Okay, we couldn't break the low of the year. And what I'm curious to see is, we're drifting our way back up north, and I'm sort of fascinated to see what will happen here. Okay, will price drift its way back up to that 113 level? Okay, which has acted as significant support and resistance in the past, where the daily 50-period moving average will be down towards as well. And so I'm looking to see, will price drift its way up to around about 113, and then I'm looking there for a trade idea. Okay, I'm looking to sort of short euro on the rallies, and what I want to see there is I'll be looking to see, will there be sort of a bearish price action there that will allow me to give me an opportunity to establish a short, okay, with a target back towards these recent lows of around about 112, okay, around about 112. So there's about 100 pips move down there, and then I'll be looking to see if price does come back down to that, how does it react? Does it create a triple bottom? Or or in which case I'd step aside, or will it slice through? In which case I will let the trade run. So just keep an eye on that at the moment. See how price reacts and it gets back to that 113 level. Just looking at one of the other big dollar pairs, is to have a look at dollar yen. Okay, dollar yen. Okay, over the last month or two here on the weekly chart. Okay, it's just been bouncing back and forth. What I look at here, once again, as a little bit of a recurring theme here, is that I just see dollar yen in a little bit of a block at the moment. Okay, in the same way that same way that sterling's been in a block, same way that the dollar's been in a block, same way here with dollar yen is in a block, and I'm just seeing this between about 110 and 112. Okay, it's just batting back and forth at the moment. Of course, if you're a range trader, well then these are glorious conditions for you. Okay. But personally, I just see that, on the daily chart, we're bouncing between 110 and 112. Also, the sort of the 20, the 50, and the 200 are all coming together. And normally, I think of that as like when you try to push sort of the two north poles of two magnets together. Is a little bit like when price and all the moving averages come together. It's like that, you're forcing the magnets together, and what happens is that they repel themselves. So I think, once again, I think maybe we'll sort of settle down around about 111, treble one, and then we'll actually look to see for something to basically make those markets push themselves apart. Okay, push themselves apart. So it's I think we're in the bit of a holiday season block, but that will change as that goes on. Before we look at the DAX to finish up, I just want to have a quick look at some of the American indexes. What we've talked about here, and if I just go to the Dow Jones. Here we are on the weekly chart. I think I said a couple of weeks ago I was expecting to see, how price reacted when it got up to around about the sort of 25 to 26,000 mark. But we can see that it's dragging north, and I'd be surprised if we didn't get up to around about that 26,700 area where we had highs back in January 2018, and then then you're looking at could it assault those recent all-time highs up towards around about 27,000. If you look at the other major American indexes, well, they're demonstrating pretty similar price action there. Okay, S&P 500 here. What I'm interested in is that's already broken its January high. It closed above it on the weekly chart, and now at the moment, and admittedly this is only Tuesday. Okay, we're looking at could there be some little bit of a rest there before once again a sort of an assault against those real highs. Okay, of around about 29.40. So I'm going to be curious to see how does price finish here this week. Okay, if it holds above that, if it holds above those highs, okay, of from January 2018, I'll see that as quite bullish, and then I'd be expecting us to move towards that kind of the recent high. The Nasdaq has been pretty much the same as the others. Okay, it's in the sense that we've had a great rally. We've passed those early marks, and now I'm looking to see, will it actually sort of move up towards those towards those recent highs. Okay, it's been just a terrific run there, and it's a case of will we break and make new highs, okay, before the sort of the summer lull sets in. So keep an eye on those American indexes. They are definitely leading the way, and we've seen that it's had an impact on the FTSE, and we can also see it's had an impact on the DAX. If I go quickly here, just to finish up. The DAX, here we go. We've had a real run up there. Okay, now there's not really been terribly exciting news coming out of these sort of European businesses to sort of drive this. I still think this is just being driven by sort of overall sentiment driven by the US indices. But last week, okay, we finished above that. 50-period moving average, and I would expect us to drift up towards about that next level resistance around about 12,100 area. That's what I'll be looking at. I'm kind of curious to see, when we look at it here on the daily chart, we're kind of, we're taking a little bit of a breather. When I go down to the 4-hour chart, what I've been looking at is I was worried, had we double topped here, and what I needed to see for that to happen was for us to break this kind of recent structure low. But actually we didn't. This morning we came down and we battered our way up, and we're back up above that 4-hour 20-period moving average. So I've been looking at here as an opportunity to buy that trend if there was a little bit of a dip. And so I've been looking to see could we get a long trade there around about sort of 11,950 with my stops at around about 11,905, and then looking to sort of target, as I said, target up towards about that 12,100 level. That would be a good trade to me. So I'd be risking about 45 ticks of trade risk, or just around about 150 of profit. So just around about a 3-to-1 trade. That's a perfect trade for me. I'm happy to sort of sit and take trades like that all day long. So there you go. We overran a little bit due to we had a little technical issue, but hopefully that gives you a little bit of a quick run through of what's going on. As I said, it's the Easter holidays, but there's always plenty to watch and keep an eye on. And as always, I wish you the best of success in your own trading, ladies and gentlemen.
Thank you very much, Paul. Thanks for the comprehensive analysis. Thanks to the audience for listening. I'm sure you enjoyed today's webinar. If you would like to review it, you can do so anytime on YouTube. I wish you all a good week and day ahead. Thank you very much, guys. Bye-bye. Thanks, Paul. Bye.